when I look at the economic calendar, it's worth mentioning that we had some early morning medium heat hot zones for Europe, including the Swissy and the Euro. When I look at the Euro Swissy, and this was Khaldoon's question, so in terms of the when of it, I just like to jump to a 1 hour chart just to get an idea of what time. So between 7 and 8 a.m. What's interesting, and this is a very important point, I try not to let, even though we spend some time on fundamentals, not some, we spend a lot of time understanding the fundamentals of a market to understand the driver, the mood, so forth, but seldom will fundamentals be what gets us into a trade. It might be the volatility that helps get us into a trade. For example, during the scheduled economic releases. Anything that we can find in a calendar could give us insight into when volatility could increase. We then go over to our auto chartist and see how much could volatility increase by. We can absolutely get a pip movement range that will help us determine what trades may be in striking distance and so forth. We've done that plenty. But when we get a move like this, which is an unscheduled rumor and or fact, we don't know at the time, we wouldn't know which, realize that the acceleration wasn't the trade. And a lot of traders, they confuse this move here, the move higher. I know you guys don't, but I'm just mentioning, just make sure you're very aware of it. They're confusing this move here with really what the trade was. And the trade, when you think about it, was actually happening in a completely different place, right? The trade had already triggered back in here. But this wasn't the trade. These pullbacks, whether you look at the 30-minute or whether you're looking at the 1 hour, I don't know if the 1 hour really offered a terrific way to get in the market, but because of the directional bias or lack of a trend on the daily time frame, traders would have likely been looking at the 15, the 30, or the 5. Well, the 5 didn't look, and remember, we're ignoring this move because that's the move we're talking about the follow-through of. So the 15, too many breaks of the wave and really not a trending market. The chart that looked good, the best, was the 30. The 1 hour or the 30 would have gotten your attention, and likely you would have chosen the 1 hour or the 30, made an exception for the lack of directional bias on the daily by looking at the 1 hour or the 30. So realize the move here was actually a follow-through, as you can see, from the pullbacks back in here. So this isn't the trade. This is the trade. That's the trade. So, yeah, terrific follow-through. Absolutely, Khaldoon, terrific follow-through. But that part of the move, as far as I'm concerned, is untradeable. Unless, and here's the trick, unless you're just watching it like a hawk, there's just no way. If you go through the triage process of all the pairs you like, and if Euro Swissy is on your radar on a regular basis, and you then realize that even though there's a lack of directional bias, the 30 and the 60 have a nice 12 to 2, you want to swing trade that market. And you're thinking to yourself, the Euro's in a pretty good mood today. There's some positive developments around the Euro story. Although, most recently, it's been punctuated by a little bit of this whole confusion over the Spanish bailout request. Realize that sovereign bailout is a reason to panic. Bank bailout, people don't panic as much. And when the first bailout request comes, sometimes traders don't realize it's a bank bailout versus sovereign bailout until that is specified, and then the market simmers down again. So part of, and I'm glad you shared that with us, Andy, part of possibly the Euro weakness we saw, and then basically how selling pressure led off the U.S. dollar here could have been that Spanish story making its way into the Euro, which is still strong, but less so. We were up about 57, 60 pips. On the Euro, we're still above 3,000, but now it's only about 38 pips. So could that be a little bit of selling pressure? No reason to panic, but certainly a bank bailout, while not as bad as a sovereign bailout request, is still no reason to celebrate. So there's your little bit of the reasoning. And notice sometimes when they're unscheduled, we don't know why. In fact, we saw the pullback happening on the Euro US. We saw the dollar start to be able to get some footing behind it, but we didn't know why. When it's unscheduled, the reason comes later. The price action comes first. The fundamental reason comes later. So we can start looking around. Okay, why is the euro suddenly weak intraday, or why is it pulling back? I wouldn't say it's weak. Why is it pulling back within the morning of so much strength? On one hand, we could say, okay, the bell rang in Wall Street. Well, that could be a reason for volatility, but likely it's that Spanish story. Now, we need to get a better idea of the timing of that, right? When is that being discounted? The timing is pretty important. So about 30 minutes ago, 1 hour ago, Spain may escape European bailout. Okay, that's giving us some foreshadowing, which is nice, but it doesn't tell us when this Spanish story nailed the market. I'd say about an hour ago. Spanish bank bailout gets go-ahead. That's on the 28th. Interesting. Spain's Eurozone partners have agreed to provide up to $100 billion. So they agreed to give the bailout. I guess now there has to be their request for it. I don't know. It seems like this story was in the ether, but now it's somehow being punctuated by Spain actually, the Spanish banks actually saying, yes, we want the money. And the IBEX is getting hammered, which is the Spain's Dow, if you will. I don't think this is a reason to abandon the euro strength story, but it's all the more reason to stay nimble. And the 1 hour is about as nimble as we can be if we are going to take advantage of this story at all. Let's wander over to the Aussie-US and then use this as an opportunity to go ahead and start looking at some Aussie pairs. So Aussie-US hasn't had DB in forever. We haven't had any kind of directional bias here in a while. As far as clarity goes, on this particular pair, let's talk about deconstruction. Starting off with what? Lack of directional bias. For conservative traders, that is enough reason to leave this pair alone. For slightly more aggressive traders, you can then look to the 5, 15, 30, and maybe under very special circumstances of just exceptional clarity, you can look at the 60. Does anything look good here? Again, go through the deconstruction. If you're going through DSS, deconstruction, selection, sequencing, deconstruction meaning what is the market trend? Where is the clarity? Because once you have market trend and clarity, then you can go on to selection. In other words, okay, how am I going to enter this market? Which time frame am I going to do it on? And then you go through your sequencing. And you go through what's the order in which we go ahead and make this happen. I think we can't even get past D here. We can't even get past the market trend. We can't even get past clarity. So realize, even though I'm kind of overlaying this whole 4-hour chef meta learning process, realize we've been doing this anyways. I'm just trying to present it to you all in a different way. And I want you to realize that this process, the way we look for the clarity and then break down the pieces, and because the clarity, we know what we're going to then use in terms of the individual tools. We can go ahead then at that point and rule things in or out. I don't like anything on this US dollar story against the Aussie, but maybe there's other stories that look better. Maybe the Aussie loonie. The loonie kind of, as I already mentioned, the dollar loonie is sort of a laggard today. So it's no surprise intraday that I'm seeing some Aussie strength against the loonie. So how do I want to tackle this one? Triage. How do we prioritize? What looks good? Do I want to stay nimble with the Aussie today? I have two choices really when it comes to the Aussie. Go very, very long term, so I have the shock absorber in front of the RBA. That's one way. Or stay nimble. And be flat in front of the RBA. Those are my two choices, really. And they're going to be dictated by your risk tolerance. It's not going to be dictated by what's quote-unquote right. It's going to be dictated by your risk tolerance. And your risk tolerance really is part of that whole selection process. If you think about once you've got past deconstruction and you're going into selection, part of selection is not a right or wrong conversation. It's a matter of your risk tolerance. So risk tolerance is part of that is part of selection. 5 or 15 look best to me. 5 is losing a little bit of its mojo here. 15 isn't really. It looks pretty good around that 30-50 area. So I'd say the 15 looks best. And again, we're taking advantage of, I don't know that we're taking advantage of a whole lot of Aussie strength. Perhaps more loony weakness. I'm not sure what's driving this thing. Because I don't know how many traders are going to be hopping in, making big decisions about the Aussie in front of the RBA when we just, you got to remember, midweek, last week was when the market really started to fully discount the quarter-point rate cut, because before then it was a hold. It was not a rate cut. 3 1/4 was going to be the hold. So it's a relatively fresh discounting we're seeing. We talked about the whisper number early. Midweek, we saw it factored into more and more economic calendars, and by now it's fully baked. People absolutely expect a 25 basis point cut out of the RBA tonight. So how many traders are going to be willing to jump in front of that? Do they think more is coming? Good question. Stay nimble or stay out. That's the dollar loonie, and I think the loonie could be a big part of the driver. I'm going to look for loonie weakness. I'm not going to rely on traders moving the Aussie around in front of the RBA. Aussie Swissy. On a more pronounced, and by the way, I'm short this market. We had those pending orders. So I'm short this market. I've got 2 short, just 2. We had set this trade up last week. So there's that short. And by the way, this was relatively aggressive, was it not? If you guys remember that short sell? I'm thinking that I would like to ride this down to 96.50 and then get long on the 15. So on the Aussie Swissy, I don't know how many of you had the pending order with me. Take my short sell to 96, I'm going to say 55 and 50-minute swing buy potential. No directional bias, south of the 200 period simple. I'd like to see the 15 roll or the 5 roll over and give me that, let's see, about 10 more pips to the downside. This is going to be based on what? What's going to drive this lower? Well, my euro re-strengthens, my Swissy will likely re-strengthen sympathetically, and the Aussie just seems to be, I think, just sort of treading water. So euro strength will help me get my follow through, and then I'll consider whether or not I think the Aussie could resume strengthening. I don't know that I want to rely on that. This is an Aussie weakness play, by the way, and a euro Swissy strength play, right? Being short the Aussie Swissy. Aussie yen? Is our risk barometer moving with, it looks a lot like the dollar yen, doesn't it? Any clarity here? Nothing wowing me. I still have my buy limits waiting, but nothing wowing me. So, as we approach the RBA, I'm going to want to see some pretty decent clarity to even consider getting into a play during a central bank decision, even when we know we have a pretty good idea what's going to happen. And I still need the shock absorber, and I want there to be some sort of clarity where I could say, okay, here's the trend I want to hop in on. Not a lot of help here. So even though it's a significant event on the calendar, it may not be really a trading event for us. Just because something's scheduled to increase volatility on the calendar doesn't mean there's going to be enough clarity on the time frames for us to deconstruct and get our selection process done and go through sequencing. I'm just not seeing it. We're just kind of spinning our wheels at the first step here. And just because there's a major event on the calendar doesn't mean we have to be involved. And you notice, even on that Aussie Swissy, I would like out in about 3 or 4 pips. In fact, I could probably get out now if I want, just because I don't know that we're going to get much further lower than where we are right now on the 60. I can give it some time. I don't mind. I don't think the trend is on anybody's side, but I certainly think that momentum and sentiment are on my side. Any questions? Let's go visit our risk picture. Dollar's re-weakening a little bit. And yep, my euro's getting a little bit stronger. That ought to help my Aussie Swissy a bit. Dow's pretty flat though, gang. Dow's pretty flat. So this is really a euro story. And the euro story, which started off with the Greek, the morning for the euro. Think about it. How did it start? Greek optimism to Spanish bank bailout request. Talk about a swing in fundamentals. Okay, so you guys tell me frankly, you're not going to hurt my feelings. I just, to keep things fresh for me, to keep things fresh for you guys, I just like to incorporate whatever it is that's going on in my life personally, because a lot of times it affects my trading, and a lot of times it affects the way I'm looking at trades. Just, you do this for 20 years, there's a certain comfort level, but you want it to be fun and fresh, and, I think this 4-hour chef combo has been fun for me. It's allowed me to take things that I possibly have going on subconsciously that I've been doing for so long, tying a shoe, shifting a manual transmission car. After a while, you stop thinking about the smaller steps. You just do it as one large step. So when I read books like this that help me break down the steps, some of which that I may not even consciously know that I'm doing, help me break it down, deconstructify, if you will. For you all, I always think that's possibly helpful. Now, if it's absolutely mind-numbing or confusing, you guys got to let me know, because I don't know until you guys let me know. So I don't know if you like my doing that. I'll continue to do it if it's helpful. If it's not, then I won't. It's as simple as that. It's just something that I thought would kind of freshen it up. I can come at the same topic 9 different ways. Some of you might like one way more than another, so I'm just trying to find different ways to explain it, because in the end it's really not that complicated. It's just a matter of making sure that it sinks in, ultimately. That's the whole point, right? So, do you guys like that? Are you interested at all? It is a lonely business, isn't it, Andy? I think that's why books, isn't it funny? Books really are conversation. You guys are my conversation. Books really are, the only way that sometimes I'm having a conversation with the author. But yeah, it is a lonely business sometimes. But I really I know a lot of people don't like Tim Ferriss. I get that. A lot of times people confuse the persona with the education, and I get that. But I like how his whole process is the minimum effective dose. In other words, not cutting a corner. What does a minimum effective dose mean? He's not saying the minimum dose. Minimum effective dose. Right? So how do we apply the minimum effective dose to life? What are the minimum things we need to be effective? You can do above and beyond. But a lot of times by trying to do more and adding more steps, we just make it more confusing and make it worse and make it something we don't want to do. He has a great point about most cooking books. I don't know how many of you like to cook. I wouldn't say that I like to cook. I sure as heck like to eat. But I won't say that I like to cook. But I do know that if and when I do cook, and this applies to trading too, and sometimes I look at my trading steps and say, are there too many steps? Yeah, Maureen, yeah, exactly. You live this, You know the power in that, because anything more could be toxic and counterproductive, right? So one of the things that I look at I'm re-examining the way I'm teaching things and even the way I'm doing things, because one of the things that he said is, as he was polling his blog members, he asked them, hey, what are the reasons you don't cook? What are the reasons you put down a cooking book? He was less interested in why people pick up a book, and he was more interested in why they put down a book. And I thought, what a great paradigm. Why do people put down the book? I don't care if it's a cooking book. I don't care if it's a trading book. Every time I say cooking, you can substitute diet, trading, finance, whatever you want. And most of them put it down because there were too many steps, too many complicated steps, too many tools needed. So I'm thinking to myself, if I'm requiring you guys to get too many pieces of software or too many expensive pieces of software, if there's too many steps, if there's too many indicators, if it's too complicated, you guys are going to put it down. You guys are just going to put it down. So when he realized that most people put down a cooking book because there's too many ingredients, I know for me, the first thing I do is I read the entire recipe and I look at how many ingredients there are. And I'll tell you the truth, if there's about more than 6 or 8, I just move on. And if I have to make up some special mix within the recipe that requires another 6 or 8, I definitely, that's why I don't make anything Emerald cooks. Everything Emerald cooks, there's a recipe inside the recipe. I'm sure he's a great cook, but looking at his recipes usually just frustrate me, because I don't want to have to cook a little something on the side to put on top of the thing that I'm cooking. So for me, that's a biggie. So does it apply to trading? Yeah. So do I have too many steps? Sometimes I think I do. I mean, I think they're required, but are there better ways that I can break them down to make it easier? So I thought it was pretty interesting in terms of everything that he said frustrates people who want to cook, I think would be the exact same things that frustrate people who want to trade. So, for example, and we're done for the day, gang. If you guys need to tune out for the rest of this, that's fine. I'm just talking a little bit more about simplifying any process. But, while he's the 4-hour chef, we're kind of the 4-hour trader, right? So, two of the things he talks about, which I think are really cool, is two principles: failure points and margin of safety. So failure points mean, in essence, where do you guys just say, this is enough's enough and I don't get this? I don't mean by trading losses. I mean just the learning process. If you can salvage a trade by way of margin of safety, in other words, a lot of trades are so specific, like for example scalping. Scalping offers no margin for error, or this margin of safety. What's your margin of error for most of our trades? Don't we typically have one or two areas, a zone, a couple choices in which we can engage the market? That's my margin of safety. I didn't realize how much this meta learning process I unknowingly had incorporated into what I do, but I think it's part of the similar process, whether or not I knew the name for it. It's a process of trying to make something usable. So we have a pretty good margin of error, margin of safety. We have multiple levels we could consider. It's not just right here or it's a failure. So, for example, when you're cooking something, and if you cook something just a nanosecond too long and it's just done, it's crap, it's going to frustrate you. You know, you take your eye off the ball, the phone rings, the kids ask you for something, the dog barks, whatever, and you take your eye off the meal and it's toast, it's just junk. Forget about it. You're not going to cook. You're going to be frustrated. So you busted your butt for 20, 30, 40 minutes, one drop in focus and it's toast. I don't want to trade that way. So that's why I don't scalp. Your margin for error is nothing. That's why we talk about cost per trade and volatility and the economic calendar, and that's why we have a zone in which we engage the market. That our margin of safety is built in. What about the failure points? The failure points, I think, are where I could get better. So here his failure points were that he found he had 100,000 people, I think, polled between his Facebook people, and I thought this was really interesting. So substitute trading wherever it applies. I think the analogies work. So the reasons people put down a cookbook, stopped following any pursuit, were too many ingredients, okay, therefore too much shopping and prep. I know that's number one for me too. So how can we substitute too many ingredients? Too many steps, too much software, too much work. That's really too many ingredients, too much shopping, too much prep. That's just saying too much work. We don't want to do something that's too work intensive before we even get started. Intimidating knife skills. Introduced too early. Okay, what's intimidating knife skills? If I got into the finer points of hardcore Fibonacci or Elliott wave or Gann theory or all these complex, finding candlestick patterns or finding complicated chart patterns, intimidating, whether it be intimidating knife skills or intimidating charting skills, if they weren't visually plotted out for you, like the wave is, like psychological levels are, you need no skill. You need zero. A 12-year-old could look at a chart and tell me if the candles are red, blue, or green. A 12-year-old could tell me where the 00, 20, 50, and 80 pips levels are. They could tell me where prices were in relation to the 20, 50, 200, above or below. They can do clock angles. Even though they're a little subjective, they could do clock angles. I could teach them a market memory. Okay, what angle is that? So I don't want my steps to be intimidating, because if I'm telling you need to start counting fancy Elliott waves, you're gone. Right? So intimidating knife skills, that applies to us as well. Too many tools, pots, pans, which are expensive, require too much cleanup. Okay, so if I have you jumping from too many different platforms, which maybe right now I am, I admit that, maybe going from TradeStation to IBFX to sometimes AutoChartist to sometimes Forex Factory. I think if we get the sequencing right, these tools come together to paint a good picture, but I can see how maybe there's too many tools by way of pots, pans, and utensils. Maybe there are. That's something I can work on, perhaps. Or fine-tune my sequencing so it's less jumping around and more methodical, more flow, right? Food spoilage. Okay, losses. Food spoilage is for us trading losses. That's going to be one of the reasons people say, okay, I can't do this. They're just losing. That's definitely a part of cooking. That's definitely a part of trading. Different dishes finishing at different times. Okay, we have this problem. We have multiple time frames. On one hand, we're looking at a daily. On one hand, we might be looking at a 5-minute. That is complicated. For some traders, you're going to say, hey, I need to focus on just the short term or just the long term. I can't be concerned with, Raghi, the fact that you said we've got BTGs on, for example, the dollar yen today and BTGs on the dollar Swissy while I'm dealing with, say, a 60-minute Euro US. I can't manage that. So different dishes finishing at different times. Well, we have different time frames that might be triggering off trades. So very similar, right? That could be very difficult to deal with. Managing very, very short time frames that need your attention versus a longer one. So maybe that's part of what we need to discuss, that time frame management, different dishes finishing at different times, different trades triggering at different times. And then finally, it was dishes that require constant tending, stirring, and watching. Day trading, perhaps. A lot of traders don't like that. Some traders love it. Some traders don't. That was one of those bottom, this was in order, I think. So dishes that require constant tending, stirring, and watching. Doesn't it, between the green, kind of need constant tending, stirring, and watching? Absolutely. Absolutely. So when I look at that dollar yen, where we were talking about BTG, I put that between the greens. You kind of have to watch this thing because it's a very, where is our margin of safety, margin for error the least? On a 5-minute chart. So if you guys start flipping through, and really, again, I think the book is on Kindle, $9. No, wait, the Kindle book might be, I don't know how many of you have a Kindle, but it doesn't matter if you have a Kindle or not. You can download the Kindle app on any machine. So really, I think, I don't know where, I'm just curious because the first, I think, what did I say, page 17 to 100, I think will blow your mind as far as, yeah, I think I got it for $4.95 too, Jerry. Yeah, I have the hardcover in front of me, and I have the Kindle version. I'm terrible. I like to either write on my books or put sticky notes in them. So I stopped writing in my books, but I'll have all sorts of notes and sticky notes inside the pages, and I still like to have a physical book every now and then. So I guess the Kindle went up to $9.99. Okay, so it's $10 now. It was $4, sadly. So the hardcover is $21. The Kindle's $10. So I do think the first, and Jerry, you have it. Have you read the first section on meta learning? I think the meta learning section alone is worth the price of the book. And if you do actually want to cook or do any of the other crazy things that he's got in here, it's entertaining nonetheless. So, cool. Did you like it, Jerry? Did you dig it? Cool. Very cool. So, I'm just trying to get to the table of contents here. Yeah, so this is the part I'm talking about. The meta learning. That's the section there that I'm talking about. Oh, yeah. A lot of cool stuff. Memory tricks. Oh, yeah. Cheat sheets for anything. Oh, yeah. It's very cool. And if you actually are in the least bit interested in cooking, I mean, he makes everything from eel to cooking squirrel. Don't let that turn you off. He was actually, when he was cooking the squirrel and pigeons and stuff, he was actually questioning our food hang-ups. Things that we decide are palatable or not, when in other parts of the world, 25, 30 years ago, sushi would have been disgusting in this country. And now it's on every corner, right? But this is really interesting. It's how to become world class. So, yeah, I love it. I love it. All right, so I'm going to go ahead and leave the quote board on for you guys. If you have any questions, go ahead and type them in. I'll definitely be here. I'm actually going to be finishing up a rereading of that section because that's a big part of the outline for the series next week. again, what I'm trying to figure out is how I can possibly get a copy of the book in your hands and donate something to charity and get this webinar off the ground for those of you that do want to join it. It will be recorded, so if you don't join it now, what I'm probably going to end up doing is, I'm not sure, probably use rally.org and create another charity drive. Yeah, how to nab pigeons in the park. I'm glad you're liking it, Jerry. It's kind of a guy's book. I get it, but my husband always tells me what a tomboy I am. Anyways. Okay. There's that Aussie Swissy sinking. Now remember, it's a one thing leads to another scenario where the short-term movement to 96.50, will it be caught here? So the question is, how long do you think Euro strength will last? That's the question. If you think Euro strength is going to last, don't get out of the trade. And if you think Euro strength is going to last, certainly don't get long. So I do expect there to be some battle here at 96.50, and then ultimately, am I being a little piggy? Could we go down to 96.20? That would be nice. So here, I go to the terminal. What I want to do here either is close my order or put a trailing stop in. Okay? I'll probably just watch it for a bit. Because if we break 50, what's my expectation? Possibly 20. If we exhaust before 20, we're going to snap back up to 50. Alright, so I'm going to leave the quote board up for a little while. If you don't have any questions, let me know. And I will see you all tomorrow morning, yeah? Questions, comments, anything, go ahead and either leave them here, or if you need to ask you something privately, no problem, go ahead and email me. Alright, gang, good stuff. I hope you enjoyed it. I'm just trying to liven it up a little bit, you know? Just trying to find different ways to present the material to you guys. And, you know, ultimately it's not just about trading. It's trading Forex. It's about trading everything. And really, I think 4-hour chef, 4-hour trader, same idea. The way we go through a trade is the way we would break down any type of skill. We just happen to be focusing on the market. Can you see my... Oh, sure. There you go, MJ. Oops. Tiny little trade. Tiny little trade. Okay. Nope, nothing. That's it. Alright, questions, comments, type them in or email me, whatever, and I will see you all tomorrow morning, okay?